Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Friday, June 17th, 2022. This is my weekly review podcast of the trades that I entered and managed last week. And in this podcast, the format, what we're going to do is, first of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions on the daily charts, on the weekly charts, on the monthly charts. I'm going to discuss why I entered the trade, what the setup was, how I'm going to manage the trade going forward, and then we'll just review the results that I had and of the closed positions or the current O positions as well. After that, we are going to talk a little bit about trader psychology, very important part of trading, probably the most important part of trading in my opinion. And then we're going to head over, we're going to take a look at my friend's trading poems, Frank, and he writes a poem each day relevant to what's going on in the market. And I always like to share that, always like to read those. They always make a lot of sense to me, and they're helpful for me, and I hope they're helpful for you. After that, I have gone down through my watch list. I have gone down through all the stocks. I have marked the ones that look interesting for me for the upcoming week. Usually when I go through the charts, the price action either has to go down further to find some support, or it has to go up maybe above some resistance and get above that. So I have marked 10 symbols, and we'll go through each one, and I'll tell you what I will be looking for on that next week. All right, so hopefully that will be helpful for you. I did find some ones that did look good, and we'll see if they trigger next week. Okay, so that's the plan for today. I am going to run the U.S. legal disclaimer, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, let's get started. So today, Friday, I did enter a new trade. This is on Pfizer. And the reasons for the trade are twofold. One, first and most, I would say most important, but well, I guess they're equally as important. But Pfizer today did go under the 30 RSI momentarily and then closed back over the 30 RSI. You can see over here is my RSI at 30.46. In addition to that, we also came down and we tested the 300-day moving average, which is a significant level of support. So I do like to take trades where I have multiple signals, a confluence, combination of indicators or support levels lining up, and this is what this is the case for Pfizer. Again, under 30, over 30, that's number one. Number two, we had an intraday rejection of the 300-day moving average. So I did have some people ask me, and they wanted me to be very specific in how I position size, and I do this every week, but let's go over it again. So at the end of the day, now I do trade at the end of the day. I make my swing trade decisions at the end of the day. I do this because at the end of the day, the large financial institutions come in, they're dealing with the most money, they have very smart people, best information, best technology, and I consider them the smart money. So the closing price is the most important price to me. And again, under 30, over 30, rejection of the 300-day moving average. Now, that is the trade setup. So when you find the setup, like I did today, of course, I have to decide how many shares I'm going to buy. So very important part here. So I'm going to use hypothetical $100,000 account. If you have a $50,000 account or a $25,000 account or a $20,000 account, it doesn't matter, $1 million account, it doesn't matter. The rule that I use is I take 1% of whatever my trading capital is. And so let's use a hypothetical $100,000 account. So 1% of 100,000 is $1,000. Make sense? So if it's $50,000, 1% is 500. If it's $25,000, 1% is 250. So for this example, we're going to use hypothetical $100,000 account. So $100,000 account times 1% is $1,000. So what do I do with that? I take $1,000, I divide it by the value of the 2 ATR, or the average true range. This is 2 times whatever the average range is of the day. I want to make sure that I put my stop outside of noise. I don't want to put it within 1 ATR because it's expected to hit that. That's the average range. So it's 2 ATR. So the $1,000 in this particular case divided by the value of the 2 ATR divided by 2.86 would tell me to buy 349.65 shares. I would just round that up to an even 350 shares. And that is how I decide how many shares I'm going to buy. And the nice thing about the ATR, it takes into consideration the last 20 days, the highs and the lows, adds them all up, divides them by 20, gives you an average. Okay, so first off, under 30, over 30 rejection, the 300-day moving average. I do my position size. Now I have to place my emergency stop. Where do I place my emergency stop? My emergency stop is exactly the same as the value of the 2 ATR that I divided into the $1,000. So I take my entry price minus the 2 ATR, 286. So here's my entry price, 46.56. I put my emergency stop down 2 ATRs, or in this case 2.86%. Now my maximum allowed loss was $1,000, right? So if the price goes down to the emergency stop, how much do I lose? I lose $1,000. That's exactly right. Now it's very unlikely that it will go down. It does. In my experience, about 5% of the time you will hit your emergency stop. But I also have what's called an end of day stop. Okay, so an end of day stop is, why did I take the trade? Well, I took the trade because of the rejection of the 30 RSI and the 300-day moving average. So in this particular case, I have 2 options to choose from. I could go with the close under the 30 RSI, or I could go with the close under the 300-day moving average. This is so close to both of them that if it closes down even a little, it will close below the 30 and the 300. So my emergency stop is down here, 2 ATRs from my entry. My end of day stop is a close below the 300-day moving average. Okay. Now, I also have people, because I always take profits on the way up. And so I want to do this specifically for you to show you exactly how I do this. So 350 shares I bought. Okay. Let's keep that in mind. Okay. Let's take the closing price. The closing price is $46.50. $46.50 plus the value of the 0.45 ATR. So this is, I use the 2 ATR for my emergency stop, but for my profit targets, I use the value of 0.45. So $46.50 is the closing price today plus 64 cents. My first profit target for Tuesday, because Monday the market's closed, is 47.14. That's my first profit target. Now I take my first profit target, again add the value of the 0.45, in this case 64 cents. My second profit for Tuesday is 47.78. That's my second. Then I take my second, 47.78, add the value of the 0.45 again to it, plus 0.64. So my third profit target is going to be 48.42. Okay, so let's just, and this is what I do every day. I put a line for my first profit target, which is 47.14. There's that one. I will put the line for my second profit target, 47.78. Oh, got that one right exact. And then the third, 48.42. Got that as well. So I took my entry based upon the confluence combination of indicators. I position size correctly, take my maximum allowed loss dividing by the value of the 2 ATR. Tells me how many shares to buy. I place my emergency stop 2 ATRs from my entry. My end of day stop is a close below the 300-day moving average. And then to the upside, I'm going to place a limit order for Tuesday at 47.14, another one at 47.78, another one at 48.82. So how many shares am I going to put in for those profit targets? Well, I have 350 shares, 10%. So I'm going to put a limit order in for 10% of however many shares I have, in this case 350, so 35 shares at 47.14, 35 shares at 47.78, and 35 shares at 48.82. Now, another component I have to add is my 1.5 ATR trailing stop level, which is $2.14. So that's right there. I'm going to make that orange so I can differentiate. Okay. What happens there? Well, as soon as the price gets to that level, touch, doesn't have to close, touch, then I will go into trailing stop mode. So that's going to change my stops around once I get to a certain point. And I mention this each week, but this podcast, I'm just reviewing my trades, trying to give you an idea of how I trade. But if you want the real specifics of how I trade step by step, you have a few options. One, I teach a one-on-one course in the evening time via Skype. Just email me. The link is my email is in the link of this description. It's a great course, 15 hours, just one-on-one. It's the best way to learn. I teach you all 5 of my trading approaches. So that's the first option. Number 2 option, I have a online video course available on udemy.com. It's very inexpensive, really, really good. The link to Udemy is also in the description. And then third, on YouTube, on my YouTube channel, I have a lessons playlist where I do go over in more depth the different trading approaches I use, how to use them. That one's totally free, so keep those in mind. Either one-on-one lessons, online course, or free stuff just on YouTube in the lessons playlist. The lessons playlist on YouTube on my channel. Okay, so anyway, that is the setup for the trade. Most important, looking for the signals, placing the emergency stop loss, knowing where my end of day stop is, placing my profit targets to the upside, also knowing where I go into trailing stop mode. So that's Pfizer, new trade today, and we'll see what happens next week. Amazon. All right. Well, Amazon was an interesting trade. I did get out of Amazon. I did buy Amazon back here May 24th. With a under 30, over 30. That was the main signal. Second signal was an undercut of the previous low, so it's a false breakout to the downside. It's also a double bottom with a bullish divergence. First bottom had deep red MACD bars. We rallied to green. We came back. When we came back, the second bottom had no red, and that's a momentum indicator. So really what that means is this first move down was brutal, strong momentum. We rallied. Second move came down to test, which it often does. But from a MACD standpoint, the move down was not as strong momentum-wise, and indicating that there's probably a lack of sellers and that selling slowing down, and implication is that we're going to rally. And that's exactly what we did. So I entered here at 104. Moved up beautifully, 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 got to my 1.5 ATR trailing stop level. Then we had a close below the previous day's low. I sold half at 122.82, and that was approximately 15.06% on the half that I sold. So locked in a nice profit there. Now, this is an interesting situation because this is an under 30, over 30. Whenever I do an under 30, over 30, if I reach my 1.5 ATR trailing stop level, it should not come back to my entry, but it did. So on the way here, you can see I took lots of profits on the way up, the 3 profit targets each day that I was telling you about. We got to trailing stop level, got out of half here with the trailing stop methodology. But again, under 30, over 30, if it ever gets back to my break even point, I'm going to get out on that second half at scratch or break even. And that's exactly what I did. I don't want to let almost a 15% gain turn into a loss. That's horrible, right? I'm sure you've been there, but it's not fun. But this was a positive trade because I sold half up here, almost 15% higher. But the second half, I'm not going to let that 15% turn into a loss. And so when it got back to break even, I just got out. Now it is higher than where I got out at break even, but I'm just not going to let a nice win turn into a loss. And so that is the rule that I use. So out of the second half at break even. All right, so those are the two daily trades. So the Pfizer trade, which I just went over in detail, that's the new trade I took today. Amazon, I am now out of this position. These are daily trades. Let's go over to weeklies. All right, so this is Alibaba. I took this a few weeks ago on Friday because that's the end of the week is Friday. I had a higher low V1 here. MACD was positive. I got in at 93.03. Placed my emergency stop, trailing stop level up here, orange line, 1.5 ATRs above. Got in here at 93.03. Last week, we went above the 50 RSI and closed below. That is my signal. Those are my rules to get out of half of the trade. So the first half of the trade locked in 15.04%. Pretty good. Lock that in, but I still have half the trade. Now, I did hit trailing stop level, which means if I have a close below a previous bar's low, I will get out of another half of what I have remaining. You can see this week at one point went under last week's low, but then closed over. So this particular trade, as is with the remaining shares that I have up. Oops. I can't see that. Yeah, 8.92%. So pretty good trade there on the second half of Alibaba. IWM. All right, this one not so hot tamale. I took this one all the way back on May 13th. What was the signal? Intra-week rejection of the 200-day moving average. Place my emergency stop. Have trailing stop level up here. Move sideways. Held to 200. Next bar went up. Did take some profits here, right? Because I do take those 0.45 ATR profits. So I did take some off sideways, tried to go up, and then we had the big move down. It's been a crazy last couple of weeks. I mean, really, really insane. Volatile. I mean, almost not mind-numbing, these moves, which, if you're long and the last couple of weeks, it's been pretty brutal. Like we had a little rally, we had one day rally, but it's been tough. It's been tough. Don't worry. I think eventually we will find a bottom. I mean, eventually we will find a bottom. But, the one nice thing about this volatility is day trading. Day trading for my partner and I, Ava, my trading partner and I, it's been a great month. We had a record month last month. We are on track for another record month this month for day trades. But swing trades have been tough. But, everyone's pretty bearish on the market, extremely bearish. That's a kind of a counterintuitive indicator to me. When everyone's bearish, who's left to sell, right? So I still need to take my signals, and I do. But my contention was that this week we would make a low. Don't know if I'm right or not. I'm not going to be stubborn about it, but that was my feeling, and we'll see if I'm right. So anyway, what was my emergency stop down here? End of day stops end of week stops closed below the 200. Well, we closed below the 200, which is the black line today. So I did have to get out for a loss of 7.26% on IWM. So out of IWM. I also trade monthly bars. This one did not work out. I was really hoping, because this was such a perfect setup on Home Depot. Nice, strong move up into an uptrend, back into the value zone. Value zones between this green line and this green line. Sideways motion. We found some support. Then we triggered a V1. Again, you can watch. You can get more information on V1 and V2 entry triggers. Big part of my trading. Either through my private one-on-one course in the or also in YouTube. on the free lessons playlist. So check that out. There's one specifically called using V1, V2 triggers, and I really suggest that you watch that. And anyway, so I took the trade at 307.41 at the end of the month. My stop is halfway of this bar. This was the bar that I took. It's called the washout bar. Right now we were clearly under, but I'm not going to make my decision to get out of this until the end of the month, because for a daily swing trade, I wait for the end of the day. For a weekly swing trade, I wait for Friday. For a monthly, I have to wait for the end of the month. And you might ask, well, what about if it just keeps going down and keeps going down and keeps going down before the end of the month comes? Well, I have that covered. I have that covered with my emergency stop down here. And if it gets down there, how much will I lose? Well, if we go back to the $100,000 account, 1% of that $1,000, that's all I would lose. Even though percentage-wise, that would be a huge amount. It would be 31%. So you would think I would lose 31% of my account? No. I would just lose the 1%. And that's the beauty of using the 2 ATR to position size. So this one I'm still in unless it hits my emergency stop. Doesn't matter if it's the second day of the month, the 9th day of the month, the last day of the month. It doesn't matter. If I hit my emergency stop, I just go ahead and get out. All right, so let's head over, take a look, do a little trader psychology. This is from the Divergent Trader on Twitter at Trader Divergence. It's a great channel. I highly recommend that you subscribe to the Divergent Trader at Trader Divergent on Twitter. These posts are pretty succinct. You can read them quickly, but they contain a lot of wisdom. And let's see what the Divergent Trader has to say today. A lot of losing traders would improve 1,000% if they just started tracking their trades. What gets measured gets managed. So can you relate to what I'm saying? Is it fun to have to add everything up, put in your numbers, look at your stats? It's really not. I make so many trades during the day. I probably make an average, I trade 2 accounts, I probably make an average of 600 trades per day on my day trades. I have to add them all up every day. Trust me, it gets kind of, it's drudgery, but it's part. I need to know what's going on, right? But of course we need to add up our wins and our losses, keep track of them. We don't want to just stick our head in the sand and not really look, because like he says, what gets measured gets managed. And so I'm a stickler about adding up my trades, about keeping statistics on my trades. And, you know, it's good information to know. You know, if I look back in 26 years of trading now, I know that I have about a 71% win rate, and my profit to loss ratio is 1.5. So 71% of the time I have a winning trade, and my winning trade is about 1.5, maybe a little higher. I don't have them right in front of me. Than my losing trades. Well, that's profitable math for trading, right? Higher winning percentage, and you make more than when you lose. So it is very important to track your trades, manage your trades. You don't want to stick your head in the sand and just hope, right? I want to feel those losses, and when I write them down every day, post or put them in my spreadsheets, I feel them, I see them, and it does make a difference. But a lot of losing traders would improve 1,000% if they just started tracking their trades. What gets measured gets managed. And for your own sake, by keeping track of your trades, it's going to make you a better trader, like the Divergent Trader says. So thank you very much. Please follow him over at Trader Divergent on Twitter. All right. Now, this is for my good friend Frank at FrankOD. Frank is the trading poet. Every day he writes a poem. I love to share this with you. Let's see what he says. Whiplash, teeth that grind and gnash, money changing hands with the speed of a flash, volatile action like a car test crash, chasing stock, then back to cash. That kind of trading belongs in the trash. Isn't that good and relevant? Whiplash. The market's been pretty whiplashy. I think you'd agree. Teeth that grind and gnash. I do that every day. Money changing hands with the speed of a flash. Volatile action like a car test crash. Chasing stock, then back to cash. That kind of trading belongs in the trash. Don't chase those stocks. Wait for your setup. Look for a good risk to reward ratio. Position size correctly. Place your emergency stop. Know where your end of day stop is. Place your overhead profit targets. Know where your trailing stop levels are. Know where your significant overhead resistance levels are. Have a good trailing stop methodology in place, right? That's the plan. That's your entire plan for the trade. You have to have a plan for the trade regardless. But thank you, Frank. Please follow Frank at FrankOD over on Twitter. All right, let's head over, take a look at some potential trades that I'm looking for next week. First is CNCE, Concert Pharmaceuticals. They have come out with a drug that tends to grow hair back in 40% of the people that were in the clinical study. And I did have some great trades on Concert Pharmaceuticals earlier back here in this nice big uptrend. I talked about this last week. What I was looking for was a pullback to the 200-day moving average. That's the black line right here. You can see it was below the 200, crossed back over the 200, and proceeded to go on a huge run. Let's see what that run was. 97%, pretty good. But not in the trade now, but I am looking for the CNCE, Concert Pharmaceutical, come back down, have a close below the 200, then a close above. That's one option. An intraday rejection of the 200-day moving average, or a bounce, because there should be buyers coming in at the 200-day moving average. I want to buy as close to that 200-day moving average as possible. If I buy, position size, place my emergency stop. If I bought it today, which I didn't, but look, the emergency stop's $1.36 below. So I would, if it rejected the 200-day, I place that there. My end of day stop will be a close below the 200. So I am looking for Concert Pharmaceutical next week to bounce at the 200-day moving average. It might just take off, and if it does, great. Congratulations to everyone that owns that, but I want to let the trade come to me before I get into the trade, and the trade coming to me would be some kind of rejection of the 200-day moving average. So that's what I'm looking for. Don't know if it's going to happen. Usually things have to go up or down first for me to get interested, but next week, if we have rejection of the 200, I will take it. All right, here is the Dow Jones Industrial Major Index. We are currently at a 2986 RSI, so we are under the 30 RSI. If next week we close above the 30 RSI, I will enter the trade with one caveat. It could close, it's at 2986. If we have a big week up next week, it might get to like 39 or 40. I'm not going to chase a 39 or 40 because I know the 50 RSI is going to act as resistance, most likely above. I need to have a good risk to reward ratio. A 40 RSI to 50 is 10 points. A 40 RSI to 30, back to 30, is 10 points. That's a 1-to-1. That is not a good risk to reward ratio. So that's why under 30, over 30s, I generally like to buy them from 30, maybe to 35, maybe to 36, because that gives me 35, 36 to 50 with 15 points to the upside and only 5 points to the downside. So that's what I'm looking for the Dow Jones Industrial. Looking over here on the weekly, look, the 200-day moving average, that looks kind of like an interesting place too. I'll have to check that next week for a weekly trade. But for a daily trade, if we close over the 30 RSI, I will take the trade, as long as it's not too far over the 30 RSI, not over about 36 is my maximum. Hope that makes sense. Walt Disney. Well, Walt Disney did have a valid trade today. It went under 30, over 30. I decided to take Pfizer because it had two confluences of signals. But next week, if Walt Disney goes under 30 and back over 30, I will consider buying that. This is the third ATR channel. The third ATR channel generally holds about 92% of prices when it gets down here. They stop going down, they go sideways, or they go up. So I like the confluence of being at the third ATR, the negative third ATR channel, and also the 30 RSI. So it did reject the 30 RSI today. Next week, if it goes under 30 and back over 30, I will be interested in potentially taking Disney. INDA, whoa, boy, I remember when this thing was just on fire. to the upside. Well, not so much now, not so hot tamale. Coming down, coming down. Are there going to be any buyers down here? Well, there were buyers today. It did go under 30, over 30, similar to Pfizer, similar to Walt Disney. Big gap here. A lot of times these gaps will get filled. That's why I like it. So it already triggered. If INDA next week goes under 30, over 30 again, I would potentially be interested in entering long INDA. Intel, well, same setup here. We're 29.32 on Intel. We're at the 4th ATR channel. It did hold. That's positive, but I still need to go back over 30 RSI for me to get interested. If we have an up week on Tuesday, it probably will close above the 30 RSI, in which case that's potential for me as well. Johnson & Johnson. Well, I've been talking about Johnson & Johnson for a while. It moved down. I wanted to look for a bounce at the 200-day moving average. Didn't take this trade, and you can see it held the 200. That would have been a good risk to reward ratio. Bounced nicely, came back down, intraday rejection of the 200 and went up. So this would still be a valid trade. I'm not going to buy this trade, or I'm not going to go long Johnson & Johnson unless I get it close under 200, over 200, an intraday rejection of the 200, or a bounce at the 200. Very similar with Coca-Cola. You can see on Thursday, we had an intraday rejection of the 200. Would have been a decent place to buy that. Was up today, closed lower than it's open. But next week, if we have a bounce of the 200-day moving average, or a close under, close over the 200, or an intraday rejection, I would buy it. Also, if it went lower than that, I would play it off the 250, the 250 SMA, which is here, or the 300, like I did Pfizer as well. Merck. Well, boy, Merck just was going up and up and up and up, and now down and down and down and down, right? So what am I looking for on Merck? Well, I believe this triggered today, just eyeballing this. Let's see. Nope, it got to 30.80. Did not reject the 30 RSI. I want to see a nice rejection of the 30 RSI. And I also would like, there's a great confluence that doesn't happen very often, and that is a rejection of the 100-day moving average at the same time you have a rejection of the 30 RSI. I talk a lot about rejections of the 30 RSI with combination of the 200-day moving average, but in order to get a rejection of the 100 as well as a rejection of the 30 RSI, you have to have a significant strong move down. And you can see from this chart, we have definitely had a strong move down. But next week, I would be looking for an under over 30 RSI and also an under over or some kind of rejection at the 100-day moving average. I'm not going to force the trade. I'm just going to let the trade come to me. What did I tell myself? Okay, Greg, I want a rejection of the 100-day moving average. I want a rejection of the 30 RSI. Did it happen? No. But is it going to happen? I don't know. It might, but if it does, I'm definitely going to take it. But the point here being is that I want to make sure that I set the terms for what I want to happen. And if that doesn't happen, I'm not going to take the trade. But if it does happen, then I'm going to take the trade because that's what I was looking for. So let the trade come to you. Don't force it and go, well, I think it's going to hold there. Let it prove it to you as well. So Merck next week, rejection of the 100-day moving average and an under over 30 is what I would be looking for. Philip Morris, very, very similar to Johnson & Johnson, Coca-Cola. These are defensive stocks. That's why they look similar. But a nice rejection of the 200-day moving average next week is what I would be interested in. And then lastly, Walmart. Well, Walmart after earnings just got hammered. You can see, right? Went down, we rallied. We've just been kind of dripping down. It's at a 29.68 RSI. MACD is green, which I like. So next week, if we close above the 30 RSI, I may potentially get into Walmart. But again, have to have a complete trading plan. look for your entries, look for your confluences, your combination of signals, position size correctly, know where your end of day stop is, know where your emergency stop is, know where your profit targets are, know where your overhead resistance levels are, know where your trailing stop levels are, and your trailing stop methodology. So there's a lot to trading. It's not just, hey, I'm going to buy here and sell here, right? There's a lot to it. You have to take into account volatility. You have to have emergency stops, end of day stops. So trading is not easy. I mean, the last couple of months have been pretty brutal as far as swing trades go. I mean, I've had some good ones, but anyone playing to the long side in the last couple of months, not so easy. Not so easy. Day trading, also not easy, but great month last month, record month. This month, Ava and I are on track for another record month. But doesn't matter if it's dailies, weeklies, monthlies, intraday trades. It's tough. It is tough. And if it was so easy, everyone would do it, sit around in their pajamas, eating Captain Crunch and trading. But it's a serious thing. It's a business. And that's why I'm trying to imbue onto you that you have to have a complete trading plan. There's lots of books out there to read. You can study with me, but however you do it, make sure you have a complete trading plan. It takes a lot of the stress out of trading. All right. So anyway, that is it for this podcast. I hope you have a really nice weekend. It's a long extended weekend because of the holiday on Monday. So I hope you have a good weekend, fun weekend, safe weekend. Maybe do a little chart study, get out, try to do some exercise, maybe some deep breathing, some presence work, spend some time with your partner, read a trading book, right? Whatever. But I just hope you have a good, fun, safe weekend. And I mentioned at the beginning of the podcast, I do teach private one-on-one lessons in the evening time via Skype. My course is a 15-hour course, 5 sessions. Each session is 3 hours. I teach you step by step all the 5 different trading approaches that I use. I have taught people from all over the world. I've turned out some really great traders. I'm a good teacher. I love to teach. And when you're done with this course, I think you're going to be very happy that you took it. The course does cost $1,750, but it's worth every penny, I assure you, from all the information that you're going to learn and having a one-on-one coach, someone teaching you. You can ask as many questions. So if you're interested, just send me an email. The email is in the link of this description, in the description of this YouTube video. Send me an email. Say, Greg, I'm potentially interested in taking your course. I will reply and say, great, let's set up a Skype call. The Skype call is free. I promise you it is not a sales call. I just want to learn more about you, your trading, your challenges, your trading challenges and your goals. It's also a good time for you to ask me any particular and specific questions about my course. And then when we're done with the call, you think about it as long as you want. I will not contact you. And if you're ready to go, just send me an email. We'll get it set up and away we'll go. And I know you're going to be happy that you took course. Number 2, as I mentioned earlier, I do have an online course available at udemy.com. It's a great course where I teach you how to trade the deep dip buy stock trading strategy. It's a wonderful strategy. I teach you step by step. The course only costs $12 or $15 on udemy.com, but there's a lot of content there. 9.5 hours of video, 26 videos total, 15 study guides. I've got so many good reviews from around the world. So that would be a really good place for you to start. So check that out. Links in the description. And then lastly, if you like today's podcast, I would appreciate it if you could hit the thumbs up button. It really helps YouTube, lets them know that there's some valuable content here, helps keep the podcast going. And so they can get it out and share it with more people, because there are a lot of people that need help with trading, right? I think that goes without saying. So if you wouldn't mind hitting the thumbs up button, maybe sharing this on social media, I would appreciate it. And one last thing, if you could try to go out and do one nice thing for another human being today, it really would make the world a better place if we could all just do one nice thing for another human being. It would also be fantastic and appreciated if you could try to go out and do one nice thing for an animal as well. I was raised with many animals. I love animals. They've been my best friends my whole life, and they appreciate acts of kindness as well. So try to do one nice thing for a human, one nice thing for an animal. It's good karma. I think we'll all come back to you. And I think one day, if you need it, hopefully someone will be there to give you an act of kindness as well. All right. So I appreciate you coming here, spending the time. I hope you had a good trading week. Hope you have a good trading week next week. And I think that's it. So I'll be signing off here. I'm going to run the U.S. legal disclaimer on the way out, and hope to see you next week. And if you have any questions or comments, just leave them in the comment section below. Do my best to get back. All right. Okay, everyone. Thanks again. Talk to you soon. And on the way out here, I have to run the U.S. legal disclaimer. Thanks a lot. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.